Great stuff. So here's your disclaimer. Obviously, we're not giving investment advice. All information for educational purposes only. There's no guarantee or promise of results, etc. That type of thing. When you're doing something like this, you've got to have a disclaimer out there. So let's press on. I think you guys have heard this a few times now, and I don't want to be the guy that just keeps repeating it every single time. Drive you crazy, drive me crazy. I have to record it and play it then in that case. So should we go to our calendar and just see what's going on in the wonderful world of FX trading? Bring this across. Here we go. Right, so the time is set correctly for once. Normally when you just open it up, it should be correct. So if you've had it open for a couple of hours, it won't be. So what we'll do, we'll look at what's going on with the news announcements and stuff. We'll look at the trades that we did yesterday, and then we'll do some more. I think for you guys this is going to be quite beneficial. We'll do some more of that analysis on finding these trade setups just by looking at different time frames, because we're trading typically 15-minute time frame. I take a lot of my trades as a 15-minute time frame, but when I speak to anybody, and so I'll get a few calls here and there throughout the day, and great, who's calling now? So anyway, so I'll get a few calls throughout the day where someone will say to me, about their specific trades or their positions, and they'll say, what do you think? So I'll say to them, like, if I can't see their screen, then I'll go on my own screen and do it. But a lot of times I'll try and see their screen, yeah. And then what I'll do is they'll watch me clicking back and through the time frames and zooming in and out. And there's a reason why I do that, because obviously I'm looking for more of a broad term picture, a broader picture across the board of what's going on. Yeah, I don't want to be blindsided by things unnecessarily. I can see the perfect setup on a 15-minute time frame as a buyer, take it and be trading against the longer term time frame, be trading right into a sell entry from the previous day on a longer term time frame, which is still going to play out for the following day. So now I'll be going against the trend. It's like trying to swim against the tide. You don't want to swim against the tide because it's going to be tiresome doing that, and it's not going to be beneficial, as I'm sure you guys know, right? So let's have a look. Today's Thursday, so we had a bit of movement out of the FOMC meetings, but nothing major. From yesterday in the news, if you look here, crude oil inventories, you'll see my pen. Crude oil inventories. Where are we here? That came out yesterday at 3:30. You'll see that there was a bit of a shift. So there was a reaction there in the markets with regards to that. Draghi spoke. There wasn't much. I didn't see any great deal of movement off the back of the FOMC neither, as such. Not really. So today, what have we got? We've had the ECB monetary policy meeting accounts come out. So we'll have to Google that if you want to have a look at that. That won't show up here because that's not an announcement that comes out. And then 8 p.m. tonight, we've got Bank of England Governor Carney speaking. So Carney, if you look at Carney tends to be quite optimistic about things in general, and with terms of the Brexit, it seems like there's this whole thing of Brexit will be good, this, that, and the other. I don't know. Some of you guys wouldn't have known me from when Brexit first came out, when they first got the result. And I remember I was saying I don't think that Brexit's going to go through. Even now, they're like, no, Brexit will happen. But I mean, we're talking about politicians here. Politicians are not honest. These guys are liars. So you've got to bear that in mind. When politicians speak, they lie a lot, So it's all to do with whatever their agenda is. So if you take, for example, someone like what's his name? Someone like Trump, for example. I mean, Trump's very outspoken, and Trump makes big threats. But then what you find is like, a month later, nothing's really happened as such, and so forth. But back to Carney. Carney has a tendency. So Trump has a tendency to behave a certain way. Like everybody has a tendency to behave a certain way. So you take someone like Trump, And you know what he's like. He is very alpha, isn't he, in his approach to things and stuff like that. And it's the same when we spoke about um, who was it? Janet Yellen, and how Janet Yellen's more of a dove. So Carney tends to be a bit more bullish and so forth. But yeah, I'm recording the session, Patrick. So it's a key thing to remember is that at the moment, currently, we do have a fundamental information, well, big piece of news that, to be honest with you, we don't know what's going to happen just yet. But has anybody seen what's going on with Russia and America? Any one of you guys following that? Yeah, yeah, it is interesting to see how it plays out with Trump. Um, America love reality TV, so it's no surprise that Trump got into that position. He's entertaining, is what it is. Um, but there is a whole thing going on with Trump and Russia and Syria and so forth, and it's been going for a long while. So there's always stuff to take into account. So it's important to have that broader view, see what's going on and stuff like that. I mean, you can't trade on the back of there being war because there isn't. Do you see what I mean? And there's and the threats. So what it was, I was reading some stuff this morning, and it was on the paper, and it was big front page splash about it. And then, as you read in, you'll see it says that this happened all last night, and that it was imminent last night. Do you see what I mean? But the other thing as well, let me just add something really quickly, is in terms of news as well, it's, you can't take the news and trade. Yeah, whatever the news is that comes out, you can't take it and trade. So a lot of people have apps and stuff on their phone, alerts everywhere and stuff like that. But typically, all this news that's coming out, it's old news, isn't it? Really, if it's just happened, it's old. The markets have always priced it in. By the time you get in, it's an emotional trade. So we don't want to be trading off the back of news, but it's important to know what's going on in terms of that. So there is this whole thing right now with Russia and Trump and this whole anti-Russia stance. And this whole anti-Russia stance, like, was predicted a few years ago. About, I think, like it was like 8 or 9 years ago. I was talking about this to somebody, and how. Anyway, let's not divert. Let's press on, because we're just looking to make some money out of this. So we've got Carney speaking today at 8 p.m. We should see some moves at the back of that on terms of the pound. I would expect Carney to have more of a positive viewpoint and look to talk things up in the UK, because think about his job. He needs to bring business. He wants to bring business to the UK because he wants money to stay moving around and so forth. So he's not going to turn around and say, look, sterling's in the crapper. He's not going to say that, is he? Especially if there's no real reason to say it. And any bit of news that comes out for Brexit that shows that talks are moving forward in the right direction, the market's soaking up quite heavily. So there's a lot going on, but there's always things going on in terms of fundamentals anyway. Yeah. So it's good to keep on top of what's going on there. Look at your news announcements, follow your calendar. Let's have a look at yeah. Mm. Yeah, it's good to have a long-term view as a short-term trader as well. You want to have that. Um, all right, cool. So, well, pressing on. If we just look at the technicals now, in terms of, like, just instead of just being like this, just be in a situation where we're doing this kind of thing. So a lot of us will have, for example, maybe say our supply demand up there, and we'll look at it and we'll look at this, say, okay, look, we've got a level up here, let's sell, and we've got a level here, let's buy, and so forth. And do you know what it is? I've spoken about this before. You know, I'll compare it to like a gladiator getting in the arena, and he walks in the arena, and it's gravel on the floor, and he'll kneel down on the floor. Take one knee, and he'll, you know, it's like he rubs the gravel in his hand almost. Do you see what I mean? Sort of smells the air and looks around. It's almost like taking in the atmosphere of what you're doing. It's the same thing with trading, right? So you could do that. I think it's always good just to take a blank, plain template, and you know, we can go to different time frames. Depends if you're not seeing anything, and just have a look at the market and see what it's doing, what it's telling us. You know, we start drawing our lines in. Um, do you know, yesterday we went over some trades yesterday as well. So these trades here, these were all trades from the live room, by the way, taken in the live room, and we did it off this same thing, and we've done this quite a bit. Some of you that have been here with me for quite a few sessions, you know, but we simply look to draw our. I know you guys like your candlestick patterns. It doesn't matter what you use. We're not taking any trades right now. All we're doing is we're just simply putting our levels in, yeah, and we can see quite clearly. This is just what everybody can see, so it's not much to decipher in that way. Just in terms of drawing a trend line, all you're looking is you can see that as the market's going up, it's respecting this area here. So therefore, we could say you've got a trend line, you know, going to the upside. What it shows the market's been making higher lows. Yeah. So if you think about a trend, if it's going up, it's making higher highs and higher lows, and that's what you've got there: higher highs and higher lows. But then, if we do this and take the top side of it and just draw it across the top, we can see it's making lower highs. It's the upside, right? So it's making higher lows and lower highs. Does everybody see that? Yeah. Yeah, perfect. Right, so what does this tell us initially? So even though we can see the market's in that uptrend here in the daily time frame, yeah. What else are we seeing? Well, what's the first strategy that all you guys trade when you first come on board? Breakouts, right? So, and what is a breakout? Breakout is a move, consolidation, and then a break. So that's what this is here. This is a consolidation. Do you guys see that? So what we were doing yesterday when we were looking at it, it was just looking at it, and it was setting up more so for a sell trade, which would line up with our level of consolidation, period of consolidation here. I'd have to go back to yesterday's, or was it yesterday's? No, it wasn't yesterday's. The day before we placed these trades. It could well be. I mean, I'm selling it here simply because if we so if we take this top bit, you guys can't see it as clearly, but we'll draw down so you can see it more clearly. This is the whole thing yesterday. Was it yesterday, day before yesterday? In the other live room that I was doing, when I was saying to you guys, right now you don't see anything, but you just see it's consolidating. So it's ranging. So what would we expect to see is it continue the range until it breaks, at least for the time being, and that range is in here, yeah. So then if we do this and we draw down to a 4-hour time frame, it becomes clearer. So I think you guys remember this. Some of you that were in here will remember this of me. Remember when I drew around this box here? So you can clearly see that, and then we extended it out, which is basically doing this. Because what you're looking at there is you're looking at your pattern, isn't it? Yeah. Do you see what I mean? You've got your. Do you see how you got this big strong push up? You've got a base area here, and then you've got sell off, yeah. So that's a rally, base, drop. So then all you do is you extend it out, and then you put your orders in. Is if that thing there, if this comes up here and hits and rejects, is it in line with my consolidation here? Does it add up? Yes or no? Clearly it does, yeah. So when you see things like that add up, so it should give you a bit more confluence in terms of like what's going on there. So that makes sense. So now you're what you're doing is you're using more than just your supply and demand level on a smaller time frame. You're taking it now more so from a larger time frame. Larger time frame, you're going to hold it for a lot longer as well because it's a larger time frame, but you risk more as well. So as you can see, the risk here would have been what for my entry about 35 pips. So you're risking more, but you're looking for a bigger move as well. So to the downside, what am I looking for this to give me? Downside at least 70. Now I'm looking to target this one down here, which is what 4107. So if I do that 4107, I don't need to free up margin because I don't care. So I can leave this and let it play out for how long it takes to play out. Whether it does or not, it doesn't really matter. I can't make this play out. Do you see? I mean, only the market can do its thing. But it's good to drill down, drill down, drill down. So then we drill down to the 1 hour, see what's going on with the 1 hour. If we drill into the 1 hour, you can see there's loads of levels here and opportunities to get back in, sell again, and so forth. Yeah, that's for higher time frame supply and demand level. The higher time frame levels are the strongest levels that you can use. You always want to use the higher time frame levels as well where you can. But when you go to lower time frame, now you can start drilling down and getting a tighter and a tighter and a tighter tighter entry. So you could have said, well, look, I've got an entry here. That's there. So that entry there would have you right now up about 3 pips or something like that, wouldn't it? Yeah. Do you see that? Yeah. So, and that's taking it from the higher time frame, drilling down, drilling down, drilling down. So it's good to do that. Drill down, drill down. Look back and forth, look away to and fro, and see what's going on. If you guys remember the dollar yen trade, let touch JPU. Sorry, 1 second, guys. This message came through. Let touch JPU. Sorry, Kennedy, don't understand what that means. If you can just I don't know if you can expand on that. That'd be great. While you do, wait for your message to come through. We're just going to take a plain chart and zoom out. I think these were all none of these trades here were taken from anything other than that live room. Yeah. So let's go to longer term time frame. Let's go to plain chart. And we're on a daily time frame here. So now I can't remember exactly what dollar yen. Okay, I don't remember. Is there anything specific on dollar yen that you want to go through? Just let me know. I don't remember exactly what it is that we did, but we would have drawn the trend line from the higher time frame. I would have put this one in here as well because there is 3 touches there. So that, I mean, this here would line up with by the looks of it, it would line up with this one here. And then this one here as well. Now at the moment, I don't have to be as accurate as that because I'm not looking to trade off this time frame here. Yeah, you with me? So that's not what I'm looking to do. But let me just take this one here as well. So I think there'd be some confluence there lining up. Anyway, so what I would have done, I'd have to go back to what day would I have to go back to? Let's just see what the entry, because I had 2 entries on dollar yen. I had a buy and a sell entry. I don't know if you guys remember this, but I had both. 04. 04. Uh, if I bought here, it would have been off. Then it would have been off. Would have been on this level here. Let me just check. Um, no, this is one I took yesterday. Who do I take these trades with? Oh, that's right. Yeah, these only got triggered yesterday, but they were from the live room the day before. Um, so I'd have to go back 2 days on this to see. Right, what I would recommend you do, if you want to know, is look at the last live room that I recorded, which would be dated in that case on the 10th, and then you can look at the trades. You can they're from the 10th because that's when they were placed. So the euro dollar didn't actually trigger. What happened to the euro dollar? So look what happened to euro dollar. Euro dollar just missed my entry by how much? Just by a couple pips, and I would have been if this would have triggered my entry if it was just a little bit lower. I'd be sitting on an 81 pip move right now on this euro dollar. But these came from going to a longer time frame. So let's go back to dollar yen. Let's go for a longer time frame. Let's have a look. Yeah, let's carry on with that then for the time being, regardless of what this is doing. Yeah, because this isn't. So we'll move that out of the way. Let's have a look at what we can see. So at the moment, this is a daily time frame. Yeah. So on the daily time frame, we can see clearly it's in a downtrend. Which is in line with dollar weakness as well as we've been seeing. So even though the news coming out of the dollar in terms of listening to the Fed speak and so forth is quite bullish, they're quite hawkish. The way they're speaking is like they're expecting good things, and then next thing that happens is we see the dollar sell off because people aren't quite buying into it. Investors aren't buying into it. In other words, they're saying the fair value of the dollar isn't as high as they're making it out to be. So I'm not sure what's going to happen with them raising rates the way they are. They're scheduled for another 2 rate hikes at the end of the year. But anyway, let's drill in. So we've been on a daily time frame. Now let's look to a 4-hour time frame and see what that's doing. So on a 4-hour time frame, what stands out? If we, by the way, we didn't do this, did we? Let me just go back and do the same thing last time. So do you see where on the last occasion you saw me draw both under and over? Yeah, you guys saw that, yeah. On this one here, the reason why you didn't really see that, when your stop loss and break even, do you run a entire trading stop, or do you watch the trade closely to make sure you're not giving much back to the market? Josh, right, so. Let me quickly look at this one question that Josh has posted. Cheers, mate. One quick question Josh has posted in terms of like, do I run a trailing stop? So for example, here, am I running the tight trailing stop on this position here? Is that what you're saying? Because on this one here, clearly you can see there's no trailing stop behind it. Yeah, but remember, you don't need to run a trailing stop other than getting to break even. So you control the stop all the way and catch as much move as you can. But I wouldn't have caught this move like this. Do you see what I mean? So even if I draw down to 1 minute, yeah, this is tightest data it's given us. Let's go to the entry, right? So let's just find the entry first of all really quickly. So we do that. Let me mark this. This would have been 11. Um, 1801, yeah. Let's find that. Here we go. We're going to find it on the 10th. 618 is going to be around about here, right? Actually, let's do this. So we're going to go back now to look for where it is, yeah? Oh, the euro dollar trade, Josh. Yeah, on the euro dollar trade. No, again, it's that euro dollar trade. What I would have done is just let it hit the target and then let it do what it's doing and then take it from there. I'd adjust my stop loss by trailing it behind the price. Yeah, so this would have been where I was triggered, right? No, here would have been where I was triggered. On this one here, it must have been, yeah. It'd have to dip in, trigger me. Now, so it pushed up a bit, 4 or 5 pips, that would have taken me out. I'd have got out of that. Comes back, gives a re-entry, right? So anyway, the point is, let's see. With this, all I did, and I do this sometimes, I place the trade and I walk away and just leave it and let it do what it needs to do, and then I'll come back and just check it as we go. So the market here at this point starts to rally up, right? So what does it do? Let's measure it, and it goes up here to here 6 pips. At this point here, definitely it would have pulled back and stopped me out. Here it would pull back and stop me out. If I'm trailing the tight stop, it would have done. Here it would have stopped me out. Here it would have stopped me out. There's plenty ample opportunity to stop me out. So all I've been doing with these is just simply moving it behind. I'm also wanting to leave them open as well because I know we took them in the live room. So I just wanted to. That's why I didn't touch this account since then. I just wanted you guys to see the trades from the live room. You know how we found the trades and how we took them. The dollar yen one was a buy and a sell, if I'm correct. Dollar yen was a buy and sell. See that? We took both sides. We took both sides because we didn't know which side was going to trigger first, and it was still enough from each side to go back and forth. So you guys remember me talking through this. I mean, I only took something like 3.8 pips, less than 4 pips out of that. Dollar Swiss, I got stopped out quite quickly on. As you can see, retrace will stop me out. The other two, I just let them run and see what they give. So what I'm looking to do with my stop loss, if my stop loss is here, all I would do is move it up. I'm not going to move it on a 1 minute time frame because that's only 8 pips away from there. Right now, for my price, I'm giving back 11, 10 pips if it stops me out. Yeah, but then I don't care because there's 39 in the bag, so I'm not going to and ah of a few pips here and there. Does that make sense? Yeah, so I'll let it go and see how it goes. As far as I'm concerned, if this market comes down and comes through here, then I'm wrong and I want to be out of it anyway, you see. Make sense? Cool, mate. So should we go back to looking at what this is doing? Flick to a 4-hour time frame. Now, on a 4-hour time frame, so on the daily time frame, I was going to say to you is like you've got no real highs or lows to measure here. On terms of that, do you see what I mean? It's not really, you wouldn't measure that like that anyway. It's a bit too steep, so you wouldn't. The market's been coming down, making its lower highs. To me, this is just a retracement or pullback into here to look for some orders or something. But it triggered my buy, not my sell. So you saw it. So obviously I got out the sell. You know, when you take it from supply and demand level, you're going to get your initial rejection anyway straight away in order to give you your initial ability to secure your profit. Do you see what I mean? So you've got that, and so when you're not trying to draw every single line and every little thing, you're trying to get more of a broad overview perspective on this, yeah. So if we drill into a 4-hour, what we'd see on a 4-hour, we should be seeing this level around here, this region around here, right? So a quarterly report. Let me just show you really quickly. If you wanted a report from Tipmill and you wanted it to show you more information, you just go to account history, right click, and then you'll go to custom period or last 3 months, and that'll give you the quarterly report. That's how you get it. Alright, so back to this. So we should be seeing this information here, isn't it? This part here, as we zoom in. We're zooming into a 4-hour. 4-hour now. 4, 8, 4, 8, 12, 24 is 6. So 6 of these 4-hour bars will make up one daily bar, yeah? Right, so so with regards to the this dollar yen trade now, yeah, so now we're drilled in. So go back a bit. We're drilled in a bit more further. So that was the area that we was looking at, yeah. So what we can use this small area here to just to draw our levels on as well. Yes, we've got, because if you do this and then we look back here, you can see we've got this area here. That's what we want to be looking at. So this is where we drew our first line, was from that big drop there. So if I go back now, this is what I'm seeing, yeah? Where I drew that first level on, yeah? Is that right? Was that the first level? Yeah, that's the first level, right? So we clearly see that now. So from here now we can start drawing some lines. Now if these lines get in the way, you can do this. You can go here, visualization, and just show it in the daily. If I do that, now it's not there. Switch to daily, it's there. Switch off, it's not. So just to free it up just a little bit, you can change the colors and so forth. So let's just draw some more lines and see what we're looking at here and what we're seeing. I'm not taking, I could take it away from the top. Right now, I'm just focusing a small area here. Why? Because there's some form of consolidation or some form of tightening here as well. Yeah, and to draw it from here, I'm more going to do it like this and see it's been broken. I could start doing this type of thing, but I don't need to. I've already got that in a daily. So now I just want to drill into 4 hour to look a bit more closely at what's going on. That's what I'm looking to do, yeah? We can see here clearly the market is making it's making higher highs. So you could call that some form of consolidation. It broke to the downside. It's obviously a false break. It's popped back up in there now, and we'll see where that's going to go to. I personally like it up here anyway. You know, so that's what I'm looking for. As I'm drilling in now, and I do this, I'm going to look to take. Did you see this area here? I'm going to use this as my base now. And then I'm going to draw around this. Wrong one. Which one do I want? This one here. And extend it out, yeah? So that's where I like it now. That's where I like it. I'm on a 4 hour time frame there, yeah? So off the back of what I'm seeing here right now, I like that. This one here, it's here, but for me, I think this one's been tested maybe a few too many times. I like it more here. Doesn't mean it won't come here and have some kind of rejection of some kind and sell off. Would it be in line with the overall trend? We're still in line with the overall trend, isn't it? So remember that, yeah? And draw down to a 1 hour time frame now. Bring that back. So we want to look back and see our level. Yeah, so you see, yeah. So, sorry, say that again. Yeah. Mm. 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 Yeah. No, no. It's more likely to fail. So the less times the level's been touched. So if you look at it, so it goes down to the level to find the orders. So let's say it finds a load of orders, comes back up, pots back down, finds some more orders. Well, I mean, institutions aren't going to start adding more and more orders each time. Do you mean they're not sitting there saying like, well, this is working, we're getting the price that we want. Let's push it down, buy again at this price and again at this price. Some point, the orders will dry up, but not all these orders can be filled at once most of the time because they need a pool of liquidity to fill them. Do you see what I mean? So on the first one, just typically the best one is going to be when it hasn't been there yet. That's why I encourage you guys to draw. The reason why I encourage you guys to draw levels as well is because the patterns that you're going to get from the indicator is going to be what? It's going to be rally, base, drop, yeah, or drop, base, rally. Has the indicator once ever shown you a drop, base, drop, or a rally, base, rally? Never. It doesn't. It doesn't draw. I'll show you. So these ones here, it doesn't draw. This is what you're typically going to see, which is going to be a lot more like support and resistance in terms of highs and lows and stuff like that. The reason why I ask you guys to draw your levels, send them in, draw your levels, send them in, draw your levels, send them in. It's a continuous thing. It's not a case of you don't do it once. And if you send me, say, 5 charts and I look at levels and say, yeah, they're all good, it doesn't mean, oh, great, I've got it now, I know how to do it. We think this way as adults. Because we're intelligent as adults, right? Or so we perceive ourselves to be as intelligent human beings as adults. Because we know what blatantly stupid is, and we know what somebody having common sense is. And especially if you've got common sense, you find it harder to deal with stupid people and so forth and stuff like that. That's what you find, yeah. So it's like there is a lot of stupid people in the world. Common sense isn't as common as what we think. So the point is if you have some common sense, a lot of times if somebody shows you something like a recipe, you know what it's like. I've seen that once. Okay, I've got it. It's a bit like a good example is someone goes to the gym and the gym instructor or their fitness instructor gives them the correct technique for them to train with. Why do they need? A lot of people, their whole thing is like, I need only one lesson. One lesson will be enough. I know how to do it and I can do it again. So the reason why we have coaches is because they're there to consistently align us, because we do go off rails all the time consistently. So what happens is the guy goes to the gym, he's got the correct technique under the supervision of his fitness instructor or her fitness instructor, and they therefore follow correct technique, right? Then the next time they think, well, I can do it myself, I don't need to pay the fitness instructor, whoever it is. But actually what you find that your technique then gets sloppy. So what we do as human beings is we then look to shortcut everything almost, right? So those of you in the room that cook will know what I mean. If you follow a recipe off of Google or YouTube at any point and you follow it to a T, then it doesn't take long before you change that. And there is a point where you can change it. Let's give an example, right? Everybody here taking us to cook rice. So let's say you said, okay, I'm going to cook rice. I've looked at the measurements, and for every cup of rice, I'm going to put 2 cups of water. That's what's required. So you get a cup, and you scoop the rice, and you put that in, and then you get your 2 water, and throw that in also, yeah? And then you boil it for like 12 minutes, and then leave to simmer, etc., all that type of stuff, yeah? And then it gets to a point whereby anyone that cooks on a regular basis, cooks rice at least anyway, or anything like that, is going to start, instead of worrying about the cup, it's going to be like, I'll put it straight from the tap in the saucepan, and then I'll just put it straight from the packet, right? You can do that, yeah? After you've got some experience of doing it, you get to know. But if you have the attitude of straight away, like, no, I can do it straight away, I can do it straight away, I can do it straight away, a lot of times we find that we don't quite have it correctly embedded. So Jamal went through that myelin slide of you guys, because what happens is neural pathway created initially is just a weak one, so you got to repeat it continuously. So that's why some guys do exceptionally well in certain arenas and some don't. What it is it's the amount of practice people are putting in, and some people, what they do is they do that diligent practice, and then some people don't. It's a unique one kind of character to find that does diligently practice like that. And it's important to do that. They follow everything to a T. They don't try and change anything. They keep it all exactly the same. It's really important to do that. And then what happens is, at the point whereby they can take off the training wheels, if you like the tricycle, by that point they're now a lot more competent because they've done it for so many more times, so much more longer. It's like driving, isn't it? It's like, so this is how you drive. You put imagine a manual vehicle, clutch down, first gear, up to the biting point, add a bit of gas. As you start to release off the clutch, you add a bit more gas and you start moving forward, right? And you can be shown that once and do it once. And there's people out there I know that have done their driving test off the back of like 5 or 6 lessons and passed. And they can drive and they're good. Other people I know have failed 3 or 4 times before they were able to drive. Now when you look at the two of them, you don't see a huge difference. Does that make sense? Yeah? You don't see a huge difference between the two later on down the line. But how they got there is another story. You know, we don't know that story till after. You know, there's some guy online, I can't remember his name is now, but he was talking about talking to kids about going back to college to get their college degrees and stuff like that. And he was saying like, look, remember, it doesn't matter how many times you fail. Once you've passed, you pass. So it's like driving. So once you've passed your test, you've passed your test. Yeah. So there's people out there that could be driving for years without a license. Finally decide to get a license. Why do they take lessons? They don't take lessons not to learn to drive, but it's to learn the right skills so they can pass their test and so forth. That's really what you're learning, is to drive safely, isn't it? More than anything else, yeah. So that's why you have those lessons. You learn that skill, develop it that way. You take a test. Your testing says, okay, look, I'm competent enough. Doesn't mean that you won't crash. Doesn't mean that you won't drive dangerously or anything like that. Doesn't mean you won't text and drive. It just means that you're competent enough to know how to drive safely. Do you see what I mean? So, and it's the same thing with trading as well. Right. So, with regards to your trading, what you want to be doing is kind of like, is that you are repeating more or less the same thing every single time. So you don't need to start zooming in and out to see what's going on. It's unnecessary for you to do that at every single day. But if you do it once a week or once every 2 weeks, it's a good idea to do that. Do you see what I mean? Does that make sense? It's a good idea to get in the habit of doing it, yeah? Because what it is like you want to develop that kind of apprenticeship, almost junior trader mindset of, because then what happens is you take away the ego from it, because it's the ego that gets in the way a lot of times of us as adults. Because as adults, you know, if I'm learning something new as well, sometimes someone's talking to me, even I can do it sometimes. I've had people say I can be a bit harsh sometimes when I'm speaking to, like customer service type people, especially when they're explaining something, and you're like, look, I can work this shit out myself. It's not rocket science. And then, I don't know how many have done this, and then you take it away and you do it incorrectly, because it's one little thing or whatever it is that you've kind of overlooked, where because we're so just look at ourselves. We're a lot more impatient now than what we ever have been in life in general. Do you guys see what the world is changing that way? Yeah. So we're just looking for a quick fix solution to anything. Right, so for example, that's why you see things like drugs and stuff like that constantly be spoken about. That's why coffee shops are opening up everywhere and stuff like that. I mean, I love my coffee. I drink coffee like a trooper. But that's not the point. The point is the society that we live in is like that. So what the markets is about, it's about more about patience more than anything else. A lot of times waiting for your setups and stuff like that. It is sometimes you look at something. I'm going to give you an analogy just in terms of how markets crash, not market bubbles, yeah, using the same thing here, yeah. So if we're looking at, say, market bubbles, yeah. So I don't know if you guys can hear what Stephen's saying. If the rest of you guys can hear what he's saying, if it's going across to the whole room, I'm not 100% sure, yeah. But we're talking about different levels. And so forth, when they fail and things like that, and so let's say for example we've got this here, this has done this is a drop, base, drop, right? So now I decide, okay, I'm going to draw my level in, okay, and this here's my zone that I've picked, yeah, based upon that. Okay, yeah, perfect, you guys can, yeah, cool. So I've got that there in place. Now that's not been touched, so there's no reason why that should come up and sell off or anything like that in terms of traditional technical analysis. Yeah, we're talking about support and resistance, trend lines and stuff like that. So I've got the trend line. I'm not trading off the trend line. I don't trade off support and resistance. I don't use any of this sort of traditional technical analysis stuff. I just use the stuff that I show you guys, right? But it doesn't mean that I can't have a look at it just to see what other people are seeing. What else is out there. So I don't completely dismiss it. I don't do on something that somebody else uses regardless. I don't know if I told you the guy's story about someone who trades the moon cycle and stuff and said he's making 50% a month. How true it is, I don't know, but people do that type of thing. So if there's something in it, and then things start to all add up. One of my first mentors, this old boy, used to use Fibonacci, and he used to tell me, like, you got, X Fibonacci level there, and he showed me a confluence of different levels. And with Fibonacci, as far as I'm concerned, it's self-fulfilling prophecy. I don't believe that the golden ratio is playing a huge part in the financial markets in that way. But then you can't deny, when you put a Fibonacci indicator on there and you see it coming back to certain levels, you can't deny that. But at the same time, you could create your own, and call it your own John Doe indicator kind of thing, and it draws lines. It's not going to be right every single time, but some points it will be right. You take a chart. If I take a chart right now, and I go to any chart, Aussie dollar, that's blank. Gee, Aussie dollar probably has the same analysis that we looked at from that live room. Yeah, yeah. Yeah, yeah, but I'm not trading off of it. I mean, I will look and see what else is going on there, because it would be, it'd be foolish not to. It's like not checking your blind spot before you drive off, right? But at the same time, doesn't mean I trade off of it. If, so for example, right, so same thing like we was doing earlier on, yeah? So let's say this is a 200. This is the 200, and I can see the 200 clearly is doing this, and it looks like it's going to line up with here when this is coming back as well. Then I've got I've got more confluence. Do you see what I mean? So if this is doing this, I don't know why this looks the way it looks now. Right, so let's say this thing comes back up now. See, it comes back up to here. Obviously, I'm not drawing. I'm not an artist. Don't critique it too much. But the price comes up here to collect my orders, and I'm looking over here, right? And I can see that this thing here is doing this as well. Then I've got confluence with the 200 moving average and my level. Yeah, with me so far. Yeah, yeah, yeah. Cool. Right. Cool. And everybody else will take it with me as well. I just need to hear one of you answer. So, um, perfect. So, Stephen, just be that voice that can confirm that everything I'm saying is making sense. Yeah. So for everybody else, now, yeah, perfect. Right. It'd be awesome, right? But let's say that the MA now is not here, right? And let's say that instead of the MA being here, because that's what those other trades were about. I didn't use a moving average, but I did show the moving average in live room, right? Let's say instead now my moving average, instead of it being there, instead the 200 moving average is up here. Does that invalidate my level? What it does, all it doesn't give you as much confluence, but but if you look at any market and you see a 200 moving average, it doesn't mean you don't see the price at any point doing this. The moving average is up here. Do you see what I mean? So I understand when it gets closer, when the moving average now starts to come closer to the price, then of course it's gonna have a bit more prominence to it. But it doesn't mean that I need my 200 to be there. I don't need any indicators along the bottom to give me confluence with regards to it. I've got my setup. I've got my setup. Yeah. And when it's like this, I take it. If it's like this, I take it blindly because it's not been touched yet. Level's not been touched yet. I've clearly identified. I've got my drop base drop. I'm looking to sell it when it comes back up and setting my traps in place there. If for example though, let's say that this level had that, I'd be a bit more cautious at this point here because what's sitting here to sell it down? How many orders are going to be sitting here to sell it down? Doesn't mean there won't be. Doesn't mean the last touch it makes can't be the strongest one that it gives because it can be. You see, and we do this whole seeing is believing things as humans. You notice that seeing is believing, yeah. So, but even though seeing is believing to some degree, but doesn't mean there isn't things that we can't see as well that exist. You know, we can't see gravity, but we know it exists, and so forth. Yeah. But I understand seeing is believing in terms of. So I just want you guys to think in terms of data. Let's say, for example, somebody called you up out of the blue and said, "Oh, hey, listen, I understand that you're interested in financial markets, and I've got this strategy for you. And we're trading these accounts, some funds or whatever it is they want to call it, and it's making actually I just lost my train of thought. There was something slightly different I was going to say. Something to do with seeing is believing. I can't remember now. Shit. And it was relevant as well. Am I referring to John? Who's John? Depends which John you're talking about. I don't know, mate. But are you talking about with the fibs? Sorry, I've got a question for Josh. That's all. But anyway, let's go back. So anyway, so let's look at this. Seeing is believing anyway, right? So when you see something, you believe it. This is what I was going to go to you with. Data. If somebody said to you, like, listen, I've got this strategy and it's made 100%. Someone said to you, I've got this strategy. Yeah, it's a new strategy. I've been trading it for the whole week and it's made 100% return for the whole week, right? Alright, okay. So, question, do you want it? Right? So that's the question, do you want it? Yes or no? So, if somebody comes to you and says to you, like, listen, I've got this strategy, look what it's done for the whole week, it's just made money for the whole week, it's taken 10 trades and 10 winners. Do you want the strategy, yes or no? Right. Exactly, yeah. So, I tell you guys heard that, right? So, the point is that 1 week of great trading doesn't mean that it's going to win every single other time because that's not enough data in the markets as well. So, you know, with these setups and stuff, drop base drop and rally base rally are the setups that I get on most. You know, if I had to pick between the two, it's what I'd look for. That's what I'd look for. I'd be looking to buy here or sell here. More so than anything else, right? Because less and less people are going to be seeing this. Do you understand? So there's less likely to be traps here as well and stuff like that. It's cleaner. Because even the indicator, most people that trade supply and demand out there, or a huge portion of them, retail, trade it only based off some kind of indicator. They can't find the levels, they don't understand how to find the levels. They're consistently reading just bits of information to try and find them. And like I showed you before, and that's why I go for it every day and draw levels every day, because that whole, when you see someone doing something, it becomes easier to mimic it, isn't it? Consistently. And that's how we learn as well. We learn more from seeing than from hearing. That whole monkey see, monkey do type thing. That's how we are as human beings. We're like monkeys in that way. So we see something, do something, and we just mimic it. And it's easier than someone explaining it and we go out there and we then do it, yeah? If, for example, yeah. Mm. Do you know one of the reasons why we do these live rooms is as well for that? So there's a lot of times that questions don't get asked as well. Um, so I mean, I was talking to something. It was yesterday. Was it yesterday? Someone said to me, you know what? I was wondering about that. I've been wondering about it for ages. And so I said to him, like, well, you should call me. Don't sit there and wonder. Always call, even if it feels like a small question. Um, you know, always call. It makes sense to. Do you see what I mean? And we're not robots trading as well. You know, sometimes we get information. When we get information, we can run with that information wherever it be. Do you see what I mean? We create viewpoints and stuff like that as well. So it means not every single trade, every single time, is necessarily going to be exactly the same. We're going to be trading the same strategy, looking for the same entries in the same way. There's going to be some times where, you know, you're sitting there and all week, you know, you're looking to get your stock to break even as soon as possible. Let it run, let it run, let it run, um, and take a 2 to 1. And then you can have a trade whereby this thing's running at your 2 to 1. You're looking at it and you're thinking, actually, there's a strong move here. Fundamentals seem to show the same thing. All my analysis shows the same thing. Actually, I think I've got a target a bit higher up. Let me remove my take profit from there. You know, I'm gonna, because that's what you do sometimes. Remove take profit. Use your stop loss to manage the trade. If it hits your take profit, you take more because it has to come back to hit your stop loss. But then a lot of times you can ride it for a lot more. You see. And the other thing I was going to say as well is, yeah, yeah, of course, yeah. Well, yeah, you're going to learn more from your losing trades than your winning trades anyway. Most people don't learn much from their winning trades. They usually learn from their losing trades. That's why typically when guys first come on board, and I don't know, some of you would have heard this, and I always say, you know, I like people to lose some money initially, you know, even if it's just like 20 quid, just so they know that nothing works every single time. You have to manage risk. The possibility of loss is as real as the possibility of gain. But at the same time, you know, if you can lose 40 pips on one trade, you can make 40 pips on one trade. The market doesn't have a bias against anybody personally. Do you see what I mean? Um, let me before we wrap up, let me quickly touch on this bit here, right? Because this rally based drop, right, pattern, right? So let's say for example you've got an entry here. Market comes up, pushes into here, sells off, right? Okay, comes up again, pushes into here, sells off, right? Now somebody trading support and resistance will still see the same thing that you're seeing here, this area. They'll still look at this as an area of resistance because now it's confirmed. So do you guys know what the confirmation is for a support and resistance? How many touches? Is it? I think it is two. Oh, 2, 3. It could be both. It could be 2, 3. I've heard different things on the back of that, so I'm just googling it. Bear with me 1 second. Let me bring this across here. Because I hear, I've heard a couple of different things on this. Now, from my previous, I remember it was always free, especially my days of teaching when I used to teach technical analysis. It was 3 touches. Let's just quickly confirm this. Uh, right, Control F touch. There we go. Number of touches. The more times test support resistance, more significant the level becomes. Price keep support resistance, more buyers and sellers noticeable base trading decisions on these levels. Right, so that's saying that the more times it's hit, the more. See if I can find the number of touches they're recommending. It says here there's 4 of them, so where are they? I see 1. Well, it's see the thing is, I just want to sort because there a lot of people see this and say, "Well, this is support and resistance." It's like it's not support and resistance. Support and resistance, all these things here. I'm sure I put support and resistance in that course I sent you guys, explain a different type of support and resistance because you've got whole numbers as well that make up support and resistance. I can't see here where it says touches, and this thing for some reason, oh, there is only one instance of it saying touches. Okay, cool. All right, well. So typically, most people say it's 3 touches support and resistance level, yeah? Okay, so once it does that, twice it does that, 3 times it does that. Now you have a level of support. So what traders will look to do, technical traders will look to buy when it comes down again. They'll look to buy here to pull it back up and so forth. Yeah. Well, look, first off, if there isn't some kind of pattern like looks like this, if I don't see my rally base drop, drop base rally, and rally base drop, if I don't see any of these, then I'm not gonna press the down arrow and it will take you to the next result. You know, I did press the down arrow and it wasn't moving. So when you see those touch, the only reason why the market's going up is because of the buying. Yeah. So when you hear people talk about it and say because traders are doing this and traders are doing that and they see it's holding up and so forth, you know, I question whether that's wholly correct. At the same time, if it gets a result, it doesn't necessarily always matter. Do you see what I mean? But the market is order driven, so it's looking for orders. That's what it's looking for. Do you see what I mean? So this will be support as long as it keeps bouncing. Do you understand me? We're not looking for a bounce off of it. We're looking for a rejection. We're looking for orders to be there for it to catch it and for it to keep driving in our direction. So what you do is the way that you identify support and resistance levels is where is it? The way you identify your support and resistance levels is not done in the same way. We don't need the initial pattern that we consistently see here. You know, we don't need for the market to come up, because this thing isn't noticing them all. It's looking for your rally, your base, your drop. Rally, base, drop. That's what it's looking for. That's what this is looking to identify. Big green candle coming up, indecision here, and big red sell-off. That to me, there is a level where I'd look to be selling that. You see, it's a rally base drop, drop base rally. So it's this specific pattern is what I'm looking for consistently all the time. What I'm not doing is I'm not doing this. I'm not open up the chart and saying, okay, let's move this indicator off of here, clean it up a little bit. I'm not just bringing up the chart and saying, okay, well look, you know, I've got say 2 touches here. I'm not saying that I've got another 2 touches here, and so forth. I'm not doing that. I'm not coming here and saying, look, I've got 2 touches here as well. And I know a lot of people look at this and think, no, but look, but it did go down, but it did go up, and so forth. You know, and I get that because seeing is believing, right? But try trading it and see how consistent you are. So what I would say is, for me, I trade supply and demand for a reason. And over the years, I've tried support and resistance and traditional technical analysis. I'm not saying none of it works, but I'm looking for more consistency. So I just trade supply and demand, and I do it in the exact same way. If it lines up with anything, then great. If it doesn't, I don't care. But yeah, quite rightly, when you look at things like a 200 moving average and a 100 moving average and a 20 moving average, they have some level of significance. We can't just ignore them either. It makes no sense to, yeah. And the reason why it makes no sense to, because you're not talking about. If you was talking to me about something else, like a different indicator, it might be different. My viewpoint might be a bit different, yeah. That's what we're talking about. Like oscillators test, for example, right? So MACD, yeah. MACD. I don't like a MACD. Some people do, but MACD. All oscillators are the same. I'm just taking a MACD. How does the MACD come about? How does this form? Well, the market opens, the price moves, and those figures that the market moves around at and that closes at are used to generate this information here. This is old, after the fact. If we put a 200 moving average, excuse me, 100, 200. Yeah, I've not been well last week, but I'm a lot better now though. You got kids, you know what it's like. Right, so 200 moving average. Now, how's a 200 moving average formed? Yeah. So remember, this information here. If you guys don't know how the moving average is done, the 200 will take it will go. Forget the current one because it's still open. It would take the previous 200 candles. It will take the closing price of each one, and it will add each one together. So let's say it's 0 spot 7 7 501, and then the previous closing price was 0 spot 77522, whatever it is, and it will add those going back 200 and then divide them by 200. When it divides it by 200, you get the average price of all of these, which then draws a line here. So again, it's a lagging indicator in the sense that the price must form in order for it to be drawn on the chart. The difference between this and the oscillator is that it's a dynamic support and resistance level. So when the price can go into it and can react off of the back of it, and therefore you'll find a 200 used quite a lot. The blueprint strategy, if you see it, works with the same sort of premise of using 200 as well. So it's not like there isn't any strategies out here that we look at that doesn't use things like this, and you can surely trade technically in that way if you like. You know, this here is a setup on a blueprint here to buy, and then the market rallied. Right now it'd be at 33 pips. It's up 56 pips, and it does do well and does make money. It is a case of just finding the one thing and just sticking with it consistently. Do you see what I mean? Anyway, we've gone over about 10 minutes, which isn't a bad thing. So today we did a little bit less technicals and looking at the charts and stuff, and it's just more about going over some of the things and taking more of a longer term view, just see what else is out there. Typically the best way I recommend everybody does this initially is to take a daily time frame and just start drawing your lines in. You can by all means take the 200 moving average for example and just pop it on there, you know, and see what it gives you. But you know, what you don't want to get caught up in, and the reason I'm saying this to you is you don't want to get caught up in them putting like now 100 and a 20 and a 50 and an 18 and a 36 and so forth, and like loads of different things on your chart. Keep it as clean as possible. Be easier for you to make a decision. A lot of people think it gives them more power to make a decision, but personally I think it'll be easier to make a decision. Get used to drawing your you know, your bases on there, like we see here. Yeah, this is the base here. Let's draw it in. Then you can extend it out and see what the market gives you. If we extend it out here, when you get this rally, base, rally, you know, you typically find you get some really good moves at the back of it, you know. So anyway, we'll wrap up now. Thanks for being here today, guys. Any questions, anybody wants to go over anything else and so forth, by all means give me a call. And we'll be around today. Ference, I don't know if you're still in the room, but we're due to talk in a little while, so I'm going to give you a shout in a bit. Anybody else, any questions, anything, just give me a shout. If you guys want to do a coaching session or anything, let me know. Thanks for being here. We'll speak to you soon. Thanks, guys. Bye now. Cheers. Bye.